Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host to the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So our bull market keeps proceeding. We keep edging higher, and every day we keep getting more fear delivered to us on the news. Which is hard to stay invested with all that negativity coming at us. But in general, the charts are still going up. So I want to cover off what I call the Stampede trade, and hopefully it'll be something you can think about in the future. And I'm from Calgary, and of course Calgary hosts the Calgary Stampede on the first Friday in July, and normally it has about 1.4 million people, so that's a pretty big event. But what we see at the Stampede trade isn't just rodeos and whatever. There's a bigger picture that goes on in the investing side, and at the end of the first half of the year, investors kind of relook at their situation. And one thing that I find is that the oil industry starts to turn up roughly the first week in July or the second week in July, right around there. And so at least start looking for it. And I call that the Stampede trade. So these energy names usually rise in the second quarter, and that's what we're going to cover off today. I'm going to work through the energy names, and I know a lot of people would already be turned off with just knowing that that's what we were going to cover off. But I want you to listen in closely, because there's some real discussion going on. You know, Microsoft is trading at 36 times earnings, and it's growing at roughly 10%. So because it has so much cash flow, it's considered like a consumer staple, very defensive and whatever, but even those can get overvalued. Apple is currently 33% above its 200-day moving average, which is typically at the very high end of the range. So you've got all of these mega tech stocks far outside their normal window in terms of relative movement, and yet we've got this whole value segment. Banks would be one, and energy would be the other, industrials, that we would look to see a rotation out of tech and into these others, or at least stop going into more tech and adding to some of these other names. And again, the big picture would be you're starting to look into 2021. And one example I heard just on the radio this morning was the earnings for the tech industry are expected to be up 16% next year. The earnings for all of the value industries, because they were so beaten down this year, would be up 35%. So there's double the opportunity for them to kind of multiply up. So it's that change in I'll call it fundamental value, and that's about as close as I get to fundamentals, that might show up. But more importantly, it's this second half trade that I like to look for in the energy names. And so today we're going to work through the energy names, exploration and production names in the US, and go through those charts. I do want to let you know, so this is what I call the Calgary Stampede trade. And anyway, I'm sitting in the infield in 2015, and this was one of the Brahma bulls. And I think one of the hard parts about the stock market is it is a bit like trying to ride a bull. It spins and twists and tries to throw you off. And as hard as it is to be optimistic in the face of all of the data we see with rising corona numbers and all that, COVID numbers and all that kind of stuff, very difficult to try and stay optimistic. But I think more importantly, the charts are trending up, and I want to prove that to you. So I've also started a promotion here in July to try and increase my subscribership. And what we've done is we've got a weekly video and a weekly newsletter and a monthly recorded conference call. We're doing trade setups 5 a day. And you're probably going to see Dwight and I change a few things up over the coming months here to try and help investors more. So if there's more we could do, let us know. Last week I announced that if anybody, or 2 weeks ago I announced if anybody was interested, they could use our coupon code called the Daily 5 to save on the annual memberships, and that would knock $360 off. So hopefully you find some value there. Come over and check it out. If you don't like it, let me know, and I'd be happy to refund your money. But I think what you'll find is some pretty potent advice and some pretty potent setups that hopefully can help you in your trading. Let's jump over into the charts. And I want to start here with the XOP. This is the Exploration and Production ETF, and it is abysmal. Fully agree. See that, no problem. I want to talk about a couple of things that are showing up on the chart that I think are particularly important. First of all, this group was valued at $173 in September of 2018, so 2 years ago. It's now at $50. So that's 30% of the value it was back then. And more importantly to me is we're moving through this, as I've mentioned in the last couple of shows, we're moving through this energy transition, and many people believe we're going to move to electric vehicles. And last week I covered off some of the reasons that I am optimistic that that might start to occur and how to get set up for that. In the clients at gregschnell.com, we've been sharing chart lists and newsletter or different sub-themes of that whole trade and how to get set up for it. In this particular, and I didn't have any of the oil and gas in there. I didn't have any of the natural gas in there in terms of how we're going to switch from energy, liquid energy, into wind, solar, and nuclear and other types of alternative energy. So with that, I still think there's a big demand for energy. Some people may disagree. The reason that I think this story is so compelling is it has been slowing for 2 years, much like we've seen the global market slow for 2 years. And it's important not to get stuck in the past saying, well, you know, the stock market was down 35% and we had really low earnings. The market is looking forward and saying, what do earnings look like from here? And if they're better than they were last quarter or better than they were a year ago, then you're going to start to see the market rise up. Clearly, we had a horrible first and second quarter for oil and gas. And what we're looking for now is the rebound out of that hole. And as we come out here, you know, even if this XOP got back to where it was January 1, that would be a double from here. So lots of good names to look at. And again, this is just taking an average oil and gas ETF and trying to work through it. I think there's some more compelling opportunities inside the entire space. And that's what I want to talk about today. So what I want to do is just roll through some of the charts, and I've gone in and I've set up the charts so that we can see what's going on. Now, one of the things I wanted to show you here is this is the oil and gas companies and ranked by price. And when we go down to the bottom here, there are massive numbers of companies that are under $1. So let's call it 40 or 50 out of the group. And with that, I rather than trying to keep looking into that group, what I've done is I've taken off anything under $1 and made it a separate list. And that just helps us clean this out. So moving from a larger group, and again, I can go back and put those in as the names prices start to recover, and maybe playing a dollar stock is what you like to do. That's very easy to do. What we want to talk about, what I like to talk about is right now it's really important to own quality. And the reason I say that, we don't know if the companies have enough cash flow to get them through to the other side. And the second thing is with oil, every well you drill, when you drill it on day one, it might produce, pick a number, 1,000 barrels a day. And by day 60, it might be down to 500. And by day 250, it's down 40%. And then each year it declines rapidly. So the problem as an energy company is if you don't keep drilling, your revenues are going to drop even if price stayed flat. So that makes a situation where in order to grow, you need capital, you need to be able to drill more wells. And what we're finding right now is that the banks are more willing to put money towards the tech area and less towards oil and gas. So smaller companies are going to be cash starved and aren't going to be able to attract the capital they need to keep their revenue going forward and their cash flow going forward. That's hard on the little guys, and so one of the reasons I've avoided all the stocks under $1, and obviously we could go a lot farther down that list, is to try and miss a lot of those companies that are going to have credit problems if they don't already, and just try to stay away from stuff that hasn't rallied. So we're going to look at the strongest charts first, and then from that, what I want to talk about is the general shape of the chart, things that we see on the chart that we want to watch for. And I think we'll find some compelling ideas here. And that's what I really want to make sure as part of the Stampede trade, as part of ending the first half, moving on to the second half, what do we see? And then the next component of that upside pressure, and we get that upside pressure by low interest rates, we get it by government stimulus, we get it by industry trying to come back to work. There's a whole bunch of things that are being pushed around to try and keep people employed while we go through this difficult period of the pandemic. So I don't want to get too bearish. One of the things about the oil and gas business is it is remote. It's not in heavily occupied places like downtown cities and that kind of thing. It's out in the country where there's a pump jack here and a pump jack there and an oil well here and an oil well there. You'll have refineries that obviously employ people. Well, they've moved to space everybody apart, so it's a safe working environment. And all this has to go on in the background to keep, at this point, let's just say that if electric cars were 3% of the transportation, we still need 97% of the transportation. So there's a significant component there that we don't want to fall off. And now that we've missed almost, I want to say 6 months of drilling, because it was slowing before and then plummeted to almost zero during the pandemic, we should start to see an upturn. And when we see that upturn, it should be helpful to watch for. So try not to get too pessimistic, because again, we're looking further down the road and we're looking towards what is starting to work. And as we come out of this, we want to play a part of that. So here is EQT, Exploration and Production Company. And what we see here is the scooter ranking is one of the strongest in all of the stocks in the mid-cap group. And so the scooter ranking at 90 means the price action on this stock is better than 90% of the stocks in the mid-cap group. That's impressive. So we've recently seen the price run up, and now it's trading in about the mid-range of its last 14 weeks. And what we're watching for is, can it turn back higher? So it's not uncommon for a stock to come up, make a wave, and then make a higher wave. And in this case, we haven't seen it for a few years. But again, this was a $21 stock a year ago, and now it's a $12.50 stock. So even if it got back to where it was a year ago, it would be another 80% up from here, and obviously up 400% off the lows. So there's a couple of things. If we let me just annotate this chart. Actually, I need to turn this off. Let me annotate this chart. What do we see? We see a big downward trend here. And as soon as we start breaking through that trend, I would expect a lot of things to change, because this is a long trend. This goes back a couple of years. And you can see here, if I just place this on the $21 level, that we've been trying to get through this level. So all of a sudden, if this is going to be a pullback and surge, this would be an important time to watch. And I also like watching the full stochastic come down to the 50 level and bounce. And if it can't kind of bounce right in between this, call it 40 and 50 level, that would be important. We're probably going to go all the way back down to the 20 and then try to rise out of the hole. As you can see on here, this PPO is higher than any time it's been in 5 years. So that's a lot of momentum and showing a real difference or a real change in behavior. And we also see that from the scooter ranking at 4-year highs. So there's a lot of reasons that this chart is starting to show different behavior based on the indicators. And if that's going to happen, that's going to be the best opportunity for us to put some money in the bank. So looking at Range Resources, this is a very popular company. What we saw is we had a downtrend in the PPO and it finally broke out, and that was a really nice move, and it came off, 250, popped up to $6 or $7, and now it's been going sideways for almost 3 months. And to me, if the PPO can turn back up above zero here, this is a very bullish place to get on board. Again, scooter ranking up around 90, and I've ranked these by scooter ranking, so the strongest stocks are first. And what we see here is, again, this was a $12 stock. It's now a $7 stock. I agree with the long-term decline. If you don't think there will ever be improvement in oil and gas again, then feel free to stay away. But I do think these names are going to start to change trend. The same thing here, the scooter ranking, or the PPO, has moved well above zero for Southwest Energy. And as we push up, we're pulling back. And now what we want to watch for is we want to see this PPO start to rise and take off to the upside, this wave somewhat like we had in here. And you can see the sudden move we had. The interesting part about this was the stock actually stayed relatively constant. It only was below the last 6 months of last year for about 3 weeks, and then it's been moving higher. So something was changing in the stock to begin with, and now all of a sudden it's starting to move. We're up around $3 here, and if we can start to break out, making the next wave higher, that would be helpful. Bonanza Creek Energy, this one just looks like a big downtrend to me. I'm not really interested in that one. The PPO momentum wave hasn't really changed, so that scares me a bit. In this particular case, the stock has been declining, and we saw this with quite a bit of the Permian Basin and the shale names is what I was trying to think of. With the shale names actually struggling, and they started to decline rather meaningfully. And so in this particular case, the stock was $20. It's now $2.50. It really needs to turn back up here, but on a turn back up, is $5 possible? Very easily. Could it get back to 8 or 10? I think the answer to that is yes. And you see the scooter ranking trying to tell us that something is different. Cabot Oil and Gas, these guys are also big in natural gas. We're seeing it bounce off the 40-week moving average and now trying to get back through the 10-week moving average and make new 1-month highs. That's an interesting place to look. Anytime something has been downtrending and starts to make new 1-month highs, it's at least worth putting it on your watch list. And we start to see this full stochastic turning up around 20. I want to see this obviously take off. And then the PPO wave is starting to improve here in terms of the two lines, the signal line and the actual PPO line, are starting to get closer together. So again, we'd like to see a bounce. What I call it is a PPO cross above zero or near zero is a very bullish place to get on board. So I like the price action here and moving back above the 10-week for the first time since early June. That's a clue. The second clue was when it got above the 10-week. The first time, that was also a nice place to get on board. From a move from 15, and even if you only caught part of it, 33% up to the $20 level. Here's Tricora Resources, and again, some of these are smaller companies, but I think we can all see the downtrend line here on the stock starting to break. If we could start to push through to the upside, that's a pretty helpful place. I like it when the PPO trend line starts to break here, and we're just seeing that this week. So that's encouraging to me that momentum is now starting to break through the downward trend, whereas price hasn't quite yet. Usually I want to see momentum breakthrough first, or breakthrough with price. So with both of these breaking that downward trend line, that would add to my enthusiasm for owning the stock. Looking at PDC Energy, again, you see these big downtrends here, and everybody's like, that's never going to change. When you get these momentum wave changes, this can be very, very valuable. A nice place to hunt the stock. And, if you go look at, I'll pick a name that obviously everybody likes now, Tesla. When Tesla was downtrending, it got down into that 175 level, and everybody was like, oh my goodness, Tesla's gone, or whatever. And then it literally broke through its momentum trend line and then took off. And I think whatever the move was, from 200 to almost 1,000 right away. So I'm not saying this is going to 1,000, but this was a $50 stock just a year and a half ago. It's a $15 stock now. Any of these turns would be very nice to see, and obviously on these small names like this. Full stochastic touching at 50 and then turning back higher again, that's a very positive place to find a turn. And price action looks pretty good here, where you came back down, tested the 10-week, and are starting to bounce up. And again, if it makes a higher high over last week, I think you want to own that. Last week was an outside week where price tested below the prior week and then closed above the high of the previous week. That outside bar is usually a pretty bullish confirmation, so we like to see that type of price action. Obviously, if the stock's going to start to head higher, there's lots of room. I mean, it could get all the way up to $7 here, and that would be almost a double. Here's Comstock Resources, still trending down a little bit. I don't see anything in the emotion yet that starts to help me with this. What I would like to see is this full stochastic start to turn up a little bit more. Looking at these guys, I'm wondering here. Equinor, what I was wondering is, did I make a mistake, and is this still ranked based on price? If it is, we might have some lower scooter numbers coming in here. We'll see very quickly. But Equinor, what we want to see here is this stock starts to break through both the 10-week and the 40-week. This is a very bullish place to get on board. Again, here we are trying to break this downtrend line in momentum. And again, on weekly charts, this is a bigger deal to me. I think it really at least gives us a place to watch. And obviously, as it goes positive, that would be another clue that things are starting to improve. So wouldn't take much for this to get going and break this big downtrend in price as well. So I'd be watching for things like that on all of these energy names. Now, again, they've already been rising for the last couple of weeks. It doesn't mean the trade's over by any stretch. I just feel like they're getting started, and it's that third quarter that we'd like to see the names obviously step up on here. So here's Hess Corporation, one of the bigger names obviously, and bouncing off this 45 level, and now all of a sudden ready to challenge the 40-week moving average after 2 quick weeks from 45 to 53. You can see lots of volatility in the first 2 days of this week. It's up to almost 10%. So liking that. Here's LNG, Cheniere Energy. They do the LNG terminals and shipping of natural gas across the world. And what we see is trying to hold the 10-week line, doing it very, very well. And now if we pop through this 40-week, I think this gets up to 60 very quickly, 67 here, and it was 50 just to close out the week. And it's been trading in this 50 range for 6 weeks without giving much back. So even though energy has been oscillating, this has been holding in there. I'd like to see it start to pop. I do like the fact that this big long trend line is breaking. Sunoco, big downtrending name here, trying to get back through the 10-week moving average. Again, the world still needs energy, and I think all of these are starting to set up with that after a bit of a nice pullback for June, giving us a chance to buy them a little lower. This one was 103, pulled back to 80. It's sitting at 90, and it looks to me like it's just going to start making its next leg higher of higher highs and higher lows. I like the PPO just starting to turn back up here. This is a very nice place on the chart. Pioneer Natural Resources, same thing. It's already filled its gap, held in here for 6 weeks, and is just breaking out to new 5-week highs. That looks bullish to me. Delic US Holdings, don't know this name. Let's just annotate the chart. And again, I'm mostly annotating the momentum because I want to see that change for sure. I'd like to see this breakthrough here. I do like it when it goes up, makes a wave, and then really surges just before it crosses. That helps. Sometimes you see that back here. So the stock, this downtrend wave comes down and then makes a quick pullback and then jumps through. In this case, took almost a month, and then that was a really nice run from 25 to 36, pull back to 27, and then on to 57. Maybe we can start to see some of these energy names return to strength. And again, we've lost a lot of junior producers. So as the market comes back, we're going to need more action out of the rest of the players in order to keep our production levels close in terms of supply. Okay, so here's Gazprom, a big one out of Russia, and we can start to see this one making new 5-week highs. PPO downtrend about to break. Look good to me. I would like to see it get back above this 30 PPO or 30 on the scooter ranking. That would be a clue that it seems to be starting to improve, much like it did back in here. And again, I don't know if the run is for a little while or for a long while, but with all the stimulus from the governments, and I know a lot of it's focused right at green energy, but we still have 97% of the transportation on old energy. And if there's going to be a shortage in supply, then all of a sudden that's going to help push up the prices and make these producers that had access to capital get back in the drilling business and start to grow the business again. 2-year downtrend here on this Texas Pacific Land Trust, and it's up around $500. If this is going to start to break out to the upside, that's helpful. I'm going to scan through some of these names a little bit faster now that we've kind of explained where we're going. Here's Petrobras from Brazil, and what we see, it's breaking out to the upside, $9. This is going to be a nice move, and then from up to $15 where it was in January, that's a 60-70% increase. Ecopetrol, this one, same idea, sitting here in the $12 range, could get all the way back up to 20 to hold up back at the levels it was all of last year. That looks pretty nice. That looks like an opportunity. Here's Parsley Energy. The CEO on this one likes to be on the media a little bit more than some of the other names, but here's $10 holding, breaking out to new 5-week highs. I like the chart technically, it looks nice. Imperial Oil is a Canadian oil company listed in the US. This is a subsidiary of Exxon. The chart's been focused in here for 2 or 3 months now, and it looks like it's starting its next leg higher, making new 5-week highs. Not my favorite name in the space, but this chart still looks okay. This chart's too jagged for me. There's a lot of drops, quick drops, and perhaps the run-ups can start working that way. That's the way it worked back in here, but I don't have that showing just yet. Here's Total Elfina, French company, Italian company. This one's trying to get going. Total is French and Elfina was Italian. So when they merged here, I guess the parent is probably in France now, but paying a 7% yield, sitting at $40 was $54. Can it get pushed up? I think so. Pado, this chart's downtrending pretty hard. It's done some splits. I think I would avoid that one for now. There's better names. CNQ is a name I like and own. This is Canadian Natural Resources, but it's Canada's largest oil company, and it's having a good week so far, up 10%. Here's Marathon Petroleum, trying to get going. Yield, again, 5.77%. You're between $35 and $40, and it wouldn't take much to get back to 60. That's almost a double. With some of the U.S. names and Canadian names, I think there's more opportunity there. ConocoPhillips, this one was $50, pulled back to 40, sitting right around there. It would be a 25% gain just to get back to where it was in early June. And I think there's lots of room for it to get up to this $64 level, which would be very significant. BP, consolidating right in this 2250 area for almost 12 weeks now. It's starting to roll on. Okay, and with that, I think we've covered off a lot of the good names here. If you got any more questions about that, feel free to email me at gregs@stockcharts.com. But thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recording on StockCharts TV YouTube page. Don't forget to check out my webpage, gregschnell.com. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.